It's monumental. The largest IPO in history is going to be not only a Chinese company, a Chinese tech company, going to be listed in China, two different exchanges. And so it's a very big milestone for the Chinese economy and for Jack Ma, who founded the other really large IPO that came out of China, Alibaba.
In that sense, we have been seeing Alibaba shares benefiting somewhat ahead of this listing. They're under a little bit of downward pressure so far in the session today, but how much more could they stand to benefit from this IPO?
I'd say that a lot of the move in Alibaba's stock from $200 to $300 is a result of the lead up to the Ant IPO. Let's not forget they own a third of it. And so as the valuation goes up, and I think it's safe to assume that it will go up, that's incremental and additional benefit to Alibaba's stock. But I'd say most of the run up recently is a result of the lead up to this IPO.
I mean, Gil, we've heard so much about the opportunities and the continued upside potential to this company, Ant, just given its sheer scale and some of the innovation it's done in financial services. What are the risks that you think shareholders should be watching out for?
The main risk to Ant is the Chinese government. Ant has become too big to fail. This is a term we used to use in the United States around 2008. Ant is now too big to fail. They have so many deposits, so many loans, so many Chinese consumer investment dollars that the government is constraining them so they don't grow too fast in too many directions, so they don't become a fault point in the Chinese financial system. And that's a constraint. That's something that if they're already have to deal with at this size, it's going to be harder and harder as they grow.
Gil, others, though, have said, Ant has gone out of its way to try to delever itself and really serve more as a platform rather than relying on issuing these loans themselves. Instead, they look to third parties. Do you think that perhaps that could ring fence them from some of these regulatory risks you're talking about?
It's helped them. Otherwise, they would have been even more constrained. But it doesn't solve all the problems because they are the platform that these other financial providers are providing loans through, investment products through. They still have customer information. They still are a point of failure in the system. And so that's something regulators will continue to look at. But it was a smart move on their part to move from delivering all these financial products themselves to becoming a marketplace for other providers, because that allowed them to get to this point of the government letting them grow and provide these services. But there's still a point of fault, and the government's going to keep an eye on that.